ability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Wow, what an introduction, man. Now you're playing with the house's money. Hey, good morning. Good morning, Mike.
Yeah, good morning, Dennis. I love that intro. I really do. I play that to get me amped up, and it's getting me amped up right now.
And yeah, so if anybody out there is looking for an intro, just let us know, because that was done by my son over in South Korea. He's a good film editor and all that kind of stuff. So, but we got more important stuff to talk about this morning. Because what if you could learn the secrets that top traders use to finish the year strongly? Do you think you might, maybe you think you're missing out on what's going down during the last few months of the year, November, December? And so how does the performance during those months how's that going to drive your trading? One of the things that Mike and I do, excuse me, as I scoot away from the table, but I want to also give this a really nice plug to Mike's book. So, Mike, why should people get this book?
They should get it because there's a very handsome guy that wrote it.
Okay.
And, in all seriousness, the reason why I wrote the Trading Mind Wheel is to help part-time traders. I've been trading for 25 years, struggled for a lot of it, and the skills that I wrote about in that book will help you a lot.
Yeah. And so, you talk about handsome guys, well, another handsome guy wrote this book, and it's called Trade Your Way to Freedom, and it's called Retire Sooner with More Money and Less Fear. And it talks about my autopilot trading system and strategies I utilize to beat the S&P for the last 13 years. And so again, but yeah, we want to tell you about our book, and we'd love for you to go out and get a copy of it. But more importantly, I know Mike's heart and my heart are really about helping you discover your path to trading success. And Mike, how many people do you think you've helped along the way in growing and becoming a better trader?
Between the seeing people in person at the New York City IBD meetup, going back to 2011, through different events, speaking at places like AAII, Illinois, and just really traveling all over the place, doing this show, doing YouTube, thousands.
Yeah.
And you don't think about that kind of thing in the moment. It's more about just helping the person in front of you, and yeah, reflecting on it now, it's wonderful to be able to help so many people and to continue to do so. It's
I agree with that wholeheartedly, because I also have helped. It has to be thousands by now. But the thing that I really love is when somebody writes back and says, Dennis, with the extra money I'm making now, I'm able to invest not in themselves. They're talking about investing in providing scholarships for families who want to homeschool. They basically also are building houses for people, for homeless people and all that kind of stuff. And so that's what motivates me to keep going. And speaking about motivation, right?
Yeah.
Well, today is Veterans Day. And so I want to basically just salute. There's one of my favorite veterans, my wife, Michelle.
Yeah.
No, she was with me from the very beginning when I first enlisted in the Navy, all the way to the end when I retired as a commander in the Navy. And so I just want to salute all my fellow veterans out there. Big salute to each and every one of you, and thank you for you. And when I say this, thank you for your service, I mean it, because I know the sacrifices you've made in your life to basically protect this country. And so anyway, my wife's going to shoot me when she finds out I put that picture on there. But
that's a great picture.
and plus,
That's something that could be on a movie billboard. You
there you
kidding me?
go. And plus us old sailors, and we like the girls, that's for sure.
Well, God bless, and God bless you for your service, Dennis,
Thanks,
and
Mike.
everybody else
Yeah.
out there that's a veteran.
Anyway, hey guys, we want to stay tuned all the way to the end because we're going to be digging into some basically strategies about how to finish up 2024 strongly. We're going to be asking you for your comments and your discussion and all that kind of stuff because we want to know what's up with you, and also if you're getting hung up with any of these myths and all that kind of stuff. So, Mike, why do traders feel both excited and maybe a little bit fearful as we get into November and December as they approach? Why do you think they're hung up with this end of year concerns?
Yeah, well, let's take a look at the market right now, right? The market just took off. We
Right?
just had an election, right? Maybe some of you out there have heard about that. And we also have earnings, and we have this Santa Claus effect, and people tend to, get very excited about the end of the year, and so uh, a lot of people start to chase performance. See ya, bob and weave. Well, what's going on?
Oh, no, I had to bop and weave to be able to see the comments on.
All right.
Anyway,
But yeah, so a lot of people feel the need to start chasing performance, especially when we're in a very, very hot market like we are right now.
oh yeah,
The Russell's trading like a growth stock, and there's a
oh
lot of
yeah,
growth stocks in the Russell. But when you see an index start to move 6% in a day, that
right,
that's that's a lot.
right, yeah.
And so yeah,
Go
go
ahead.
go ahead.
No, no, no. Go, go.
We're both being too polite.
That
Um,
is a lot. So, a couple of things that we've also talked about. We'll talk about a couple of the leverage ETFs today that we've suggested in the past, and we'll dig down into that after we get done debunking the myths we're going to be talking about. But I mean, my goodness gracious, I jumped on TSLL a couple of months ago, right? When TSLL is the two-time leverage ETF for Tesla. Well, as you know,
mm,
what happened after the election, Tesla took off like a rocket ship, but TSLL outperformed that, and I was up over 100% in the position. So you know what I did, Mike? I
what do you do?
I basically sold half my position because that makes my cost basis on the rest of the position almost zero, which is I
Oh,
love it. And now you know what I'm doing with the rest of the position?
what are you doing?
I'm selling covered calls against it. And with this particular covered call, I can generate an extra, like $500 a week worth of income, which is, hey, I'm not going to complain about $500 a week extra income. I don't know
Yeah,
anybody who would.
yeah, no, I wouldn't either. That that covers the adoption fees of a dog. That
That's
I just
right.
adopted a dog over the weekend, and that's about what those fees were. So I'll take an extra 500 a week.
Certainly, and I love that particular strategy of just, waiting and doing that. So, like we talked about, the seasonal patterns, tax loss selling, or some of the things that happen, uh,
Mm,
in the end of the year. Um, and then also this year we have an extra special kicker on there in that it's the election cycle. Now we're not going to get into the election itself, but we are going to take a look at a couple of charts that show that 87% of the time after the in the presidential election cycle year, in the months of November and December, the market has gone
mm,
up and gone up dramatically. And one of
right.
those is, let me run back over here. And there we go. And here's a perfect example, and I have to give credit to John Pocoroba for the Boston IBD. He basically rankings insights, and he is over on X. John's a really amazing historian about the market, and he
Mhm.
just captured three of the last uh, presidential cycles. And notice, yeah, big pull down before the election, but look what happens after the election, which is one of the things that we want to be aware of. Rally, 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 strong rally, all the way into the end of the year and sometimes after the end of the year. And so we've already seen that that's exactly what's taken place with this particular market.
Mhm.
But as I said, 87% probability or chance that the market rallies after the election. So while yes, that's not absolutely certain, but those are the odds of it continuing to happen. And so amazing, it is basically reenacting itself
Yeah.
as we speak right now.
Yeah.
Great charts, and I want to thank John for these great charts he provided a few weeks ago in the IBD national meetup.
Yeah. We're
So
interviewing him in a couple of weeks, aren't we?
we're going to be interviewing John, I think the 25th of November. And you talk about a great historian about the stock market. It is absolutely phenomenal. So, well, let's go talk about, let's see, what else we got going on here. Okay, timing, trading biases, and
Yeah.
resulting miss. This week we're going to be kind of talking about the types of biases, trading biases that can crop up
Hmm.
in, when at the end of the year. And one of them, the big ones, is the overconfidence bias. So, you're the one who's done all the study on mindset and psychology and all that kind of stuff. So, what is the overconfidence bias?
Oh, sure. So here's basically how it goes. You start to have a few winning trades in a row. You get on a hot streak, and let's say that you're somebody that's been trying to put this trading thing together for a little while. You've been studying real hard, putting in a ton of effort, and you finally start to gain some traction. You finally start to gain success, and then the narrative that plays in the back of your head is, "I finally have turned the corner.
Mm,
It's me."
yeah.
So, and that's not to take anything away from you. Perhaps you probably have improved some of your skill sets, but there's also, if we're not careful, a bit of overconfidence can start to play into that, where we start to go for trades that are maybe a little bit more aggressive. Maybe they don't quite fit the exact parameters that we've set for ourselves. Maybe we fudge a little thing here, a little thing over there. And because the market condition is favorable, we're able to get away with some of those habits.
Yeah.
But
Yeah.
if we're not careful, that can come to bite us in the butt later
Yeah.
on.
It remind,
And
yeah.
yeah, it's not pretty.
Yeah, it reminds me of a story, this trader, and we'll call him John for right now. But he basically, had a great October, and he was just really looking forward to continuing on. But this made him too confident, and so he basically walked into November and December. He started doubling down on his positions. He started ignoring the strategies and the rules that were made him successful through the rest of the year. And but guess what? An unexpected market change caused him to lose a lot of money. And the particular John I'm thinking about, and I know about that this story comes from, is he let a 5-figure loss turn into a 6-figure loss, all because he was so confident that he was right in his analysis of the market. So, I'm sure some great stories, Mike, of people who have, done some of the similar thing, right?
I know similar stories from this guy named Mike Lamothe. Maybe you've heard of him.
Yeah.
Yeah, all those kinds of things. Getting overconfident, not having proper rules in. There's a trade. I actually think I may have written about this one in the Trading Mind Wheel. This trade that I had in Alibaba,
Yeah.
and it was one of the first IPOs that I bought after studying IPO bases and how they're supposed to move, and learning about Can Slim and model book stocks and all this stuff. It had the story, it had the proper move, it had everything.
Right.
So I did buy it early in this when it started to break out from the space. I almost bought it near the bottom of its IPO basing pattern, where it's just
Right.
consolidating sideways for a little bit, breaks out, and I'm like, oh man, like I I got this great. I'm profitable. I'm starting to turn the corner at that point, so it starts to pull back, and then I add to it, and the first ad and even the second ad end up being great, right? Profitable.
Okay.
And that's reinforcing the bias some more. So, hey, I want to be Bill O'Neill. I want
Okay.
to continue to feed this position and end up being 100% long Alibaba, because at one point Bill was long Apple and Google,
Right.
and was fully leveraged on just those two names. So I thought this was going to be my version of that.
Yeah. And
So
how'd
it,
that work out for you?
well, it worked out okay for a hot minute, and then later on, price started to pull back to the 50-day moving average, and so then I added some more, and then it fell. And
Okay.
then, well, it'll find support eventually, and then it didn't. And I ended up giving back almost all my profit. And
Wow.
it's not because, let's say that I bought here and I sold here. It's because I bought here, added more up here. Then when it pulled back, added more, and then by the time I sold, like that's what ate into the profits. It's like continuing to add and then getting out.
Now, I got a very quick question for you. Okay, you had overconfidence. So,
Mhm.
with that overconfidence, did you ignore your rules for exiting the trade, or did you have rules for exiting the trade at the time? Had you gotten to the point of developing all your exit rules so that would have protected you if you would have, if you had them in place?
No, I didn't have quite. You know what? At that point, I had tried to adopt as many rules as I could from O'Neill and from IBD, and then from other people that I found along the way.
Sure.
And I was that guy that had about 100 different sell rules and 100 different buy rules, and I would come to the
Mhm.
market each day, and at the end of the day, be like, okay, which rules are being triggered? Oh, there's about 15 different sell rules, but there's about 20 different buy rules. What do I do? And I'd be
Yeah.
the deer in the headlights.
Ah. Okay.
And
So
that
now,
so
go ahead.
it's all of that that eventually led to what at least some of what I wrote in the Trading Mind Wheel, especially the parts on mindset. Mindset's a part of all of it in every single chapter, but particularly the parts on trade management.
Yeah, right on. So, that's so funny that you talk about that having a background as a naval aviator, used to be a jet jock flying, jets for the Navy, and you had this kind of gunslinger type attitude, if you will. And it was like, we don't need no stinking stop loss rules, and that's the way I would trade for a long time. And I got my face ripped off so many times. I actually blew up a couple of accounts, and it's a painful experience to have to explain why you blew up a couple of accounts to your loving wife who's been counting on that money for retirement. So, but anyway, we've made it all back, and so we're in good shape now. But oh, that was an expensive lesson. So even for experienced traders, if they get too big, uh, with their positions, especially going into the end of the year. They can have some certain expectation. Nothing wrong with that. Like we mentioned earlier, we've got the 87% chance that after the election, no matter who's elected, it's going to rally. It has, but right now, we're overextended. So what are you going to do? So one of the solutions to, and I'm going to read this solution. And Mike, you tell me if you agree with this. To beat overconfidence, traders should use a checklist to
Oh yeah.
evaluate each trade and never assume that past success means future wins. Setting limits on position size can also help keep overconfidence keep that overconfidence in check. And like I like to say is with regarding that thing in evaluating is trade the chart in front of you. And dadgummit, if you have a rule about stop loss, which you should, if you don't have a rule about stop losses, you're basically, just write out a check to Mike and I, send us your money because you're going to lose it anyway. And we would, we'll at least give you a subscription to our service. Anyway, so Mike, what do you, do you agree with that?
Would it be okay if I share my screen and share them something that came out of exactly what you just mentioned here with checklists?
Certainly.
All right. So let's see if I could share this. So I added that. I think that you've got to put it on the screen for us.
I do. Okay, hold on a second. Okay, hold on a second. Let's see. Add to.
Yeah, there you go. All right. So I used to try to work off of a checklist, and a checklist is a beautiful thing to have. Especially when you're making those first selections to make sure that yes, this stock has all the different things that I'm looking for: the earnings, the sales, all these different things. What eventually I came to was, I've got a checklist with, say, 7 or 8 boxes checked, and I've got another checklist with 7 or 8 boxes checked. What do I do? Which one do I buy?
Right.
So what I came up with was this solution here, which if you go to marrowwealth.com, click on Trade Gauntlet Calculator under Tools, and this is free, by the way. I'm not logged in. Anybody could come in and use this. And I also talk about this, the concept of having this in the Trading Mind Wheel. This is a checklist, but it's a weighted average checklist.
Oh, cool.
So each one of these bits of criteria have weights assigned to it. And so I'll go through this whole thing if there's a stock that I find that I'm interested in, because I want to verify that, hey, what I'm pumping my money into, it actually does fit the criteria. Not that it's necessarily going to be a winner or not, but I wanted to at least make sure that it could jump through all these hoops. Now, nothing's going to pass 100%. I want to see it pass with a score of 7 or higher. And that's not just pluck a number out of a hat either. That's having gone back through my trade journal and taking a look at all the trades that I've had and what scores that they got. And I saw that the vast majority of the winning trades, the big winning trades, had over a 7. So it's like, great. That's a great way to weed out a lot of the garbage. And it's not that it can't win if it scores below a 7, but I want the odds in my favor. So that's what I do.
So no, that's a great, and I'm, I am very much about checklists. We've got a couple of checklists also that you do something very similar, but at the same time, it doesn't take long to go through the checklist. And let me tell you, it is so much better to, one of the things I found is if something fails to pass, to pass the test of the checklist, is just get the heck out of Dodge and leave that alone. Don't touch it, no matter how tempting it is. And we're going to cover one of the major biases that result in jumping on a stock that you probably shouldn't in just a couple of minutes. So cool. Excellent, Mike.
Yeah.
Can we go back to moving on to our next bias?
Yes, go for it.
Okay. So, Okay, next bias, confirmation bias. Traders only look for information that matches what they already believe. Uh, Now, and which can lead to wrong ideas about market trends. Now, from what I understand, is market confirmation bias can be so severe that it actually is almost a mental illness.
Hmm.
That and people convincing themselves that what they believe is the truth. But if the what they believe is based on beliefs, then they're believing a lie. And so an example of this would be, like uh, a trader is just, he's so sure about the year-end rally, and he only reads newspaper or the only newspaper articles are MSNBC, not MSNBC, but the financial networks. The only stories that actually catch his attention are stories that confirm what he thinks, what he believes.
Mhm.
Unfortunately, when the market doesn't do what he expects, it leaves him with big losses. So, what's the story on confirmation bias?
Oh yeah, it's a rough run, especially well when you have deep-seated beliefs.
Yeah,
One of the I talk about this in the Mind Wheel too, and it's uh, the biggest thing that I saw with beliefs and trying to come over all sorts of beliefs and trying to almost reprogram ourselves. Happened at this Tony Robbins event that I went to. It's called Unleash the Power Within.
right,
At one point, where we're trying to identify what our limiting beliefs are and attempting to pull them out like weeds, right? Because that's basically what they are.
mm,
And so he had this whole process of what he called the Dickens exercise, and I talk about the Dickens exercise in the book too, because it's so effective. And basically, what we want to be able to do first is figure out what beliefs are serving us, which ones aren't serving us. So that's how we're going to find out. Well,
right,
okay, here's what we need to do this Dickens exercise with, because we want to make sure that we're pulling a weed, not a plant.
right.
Once we've identified that, then we go through this Dickens exercise of it's like, okay, we have this belief, and if we fight hard enough for the belief, guess what? We get to hang on to it. But
Exactly.
but if we hang on to it, well, what's life going to look like a year from now?
Yeah,
And what's life going to look like 5 years from now? What's life going to look like 10 years from now? But and we could all play the home game right here and start thinking about those kind of things ourselves right now. But imagine that you're sitting in an arena well with probably about 10,000 other people, and
right.
you're doing this exercise together, and the exercise is maybe about half an hour, 45 minutes, and before that you were also taught that emotions, we could basically summon any emotion that we want with the snap of a finger.
Sure.
So uh, what we want to do to pluck this belief weed, if you will,
Right.
is to make it so incredibly undesirable that the holding on to it isn't an option anymore. Burn the boats, as they say.
Okay.
So you're doing all this exercise for half an hour, 45 minutes. You have everybody's wailing, all right,
Right.
uncontrollably, myself included, because thinking about what's going to happen if we're holding on to these beliefs, and it just becomes so intolerable that you get yourself to a point where it's just like, no, I've hit rock bottom and no more.
Right
It
on.
has
Yeah.
to change. And so once you get to that point, you are able to pull the weed, but you also need a strategy of, well, what am I going to put in its place? Because
Right
if
on.
we don't put something good in its place, then anything will come and fill that spot. We've got to be intentional about what's going to fill that spot.
Right. Right.
So,
That that's interesting you say about what's going to fill that spot, because so oftentimes both of us are believers, and and the Bible talks a little bit about that, is what happens to the man who has an evil spirit removed. from him, inside him, and they
Mm.
get rid of that. But if he doesn't replace it with something good, something, the Holy Spirit, something of God, if they don't replace it, then there's 10 other evil spirits that come back to take its place.
Oh yeah.
So anyway, one of the things when it comes to the confirmation bias, and I'll just throw this out there and just keep it, for a brief comment on it. But one of the things that's been lacking in our educational system is basically we have been losing the ability to, or they have not been promoting critical thinking and learning how to be a critical thinker,
Mm.
because that people still have that and develop that skill, but since there's a lack of critical thinking, do you think that leads to strengthening the aspect or concept of confirmation bias?
Oh, sure. If that's the case, then yeah, absolutely. And I think that a younger generation would be in trouble if they don't develop those skills. And it's not to say that they can't develop those skills later on, but
Right,
the earlier that you're able to develop those skills and have good guidance in it, the better.
right on, right on. So anyway, to avoid confirmation bias, traders should look for information that challenges their views, and keeping a trade journal is one of the best ways to be able to do that, because you can write down in your trade journal exactly how you're feeling, what you're thinking, and that kind of stuff. And then also join a network out there, a community. Mike has a community, I have a community, and for our premium members, they can come over and join us on Discord, which is a lot of fun. Um, but basically, to talk it out, because if the only conversation you're having is with yourself, you're setting yourself up for problems. And so, one of my favorite biases, Mike, and I think this was one we talked about a little bit later. And guys, we will get to the individual stocks here shortly, what we're
Mhm.
looking at. Uh, but herd mentality bias, it makes traders follow what others are doing, which leads to false expectations about market moves. Now, we see a lot of influencers over, and I'm not going to put them down, but we do see a lot of influencers over, like on Instagram, and not so much on X, because X basically speaks to I think a different level of traders, and also LinkedIn, different level of traders and all that kind of stuff. But uh, Instagram, TikTok, basically can be a very appealing, but a lot of the influence over there are depending on a herd mentality for people to come jump on the boat for them, and they wind up getting hurt later on. So what's up with herd mentalities?
Yeah, when everybody wants to jump on the boat and everybody gets to one side of the boat tends to tip over.
Right on.
And that it's a sad analogy. It's a true analogy, and I think that hopefully we have more and more people tuning into this show because hopefully they'll be able to avoid some of that, or at
Yeah.
least recognize it in themselves when that's happening. Because like we touched on before, it will work for a little while. You can jump on the momentum for a little while
Okay.
and ride the wave. The problem is that you don't know when it's going to end.
Right. Right.
And the herd is likely continuing to run off the cliff before you realize that, I'm down 100 feet and yeah, the cliff was back there.
Yeah. 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 Without a doubt. I mean, it's almost like the running of the lemmings. One lemming follows the other one off the cliff until they all are destroyed. But the herd mentality also, I think, when we see somebody else, I know, like, this has been my experience with, when I see somebody else doing well, or they've made a particular trade and it's doing really well, there can be this urge of to either go, dadgummit, I missed the trade and I'm going to jump in on it right now and
Yep.
see what happens. And so if I'm governed or if I'm controlled by a herd, the mentality of the herd, I will have a tendency to make bad decisions based on my false beliefs that lead me to getting into trades too late. In
Yeah.
other words, the run is almost over. And
Right.
so,
Right. And I think that both of our services are set up in this way where, like, to help to combat against this herd mentality, we'll give out the trading plans ahead of time, like the night before.
sure, yeah,
So that way people could read it, absorb it, and then it's just like, okay, here's what the plan is. You set everything up, and you're good to go the next day. You're not just sitting here waiting for an alert that may or may not happen. You already know what the plan is. And when you start, because there's so much trash out there, like they're just putting things out. Oh, like it's a real time alert, but if you don't have what it's going to be beforehand, and you just see ding, 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 ding going
yeah,
off,
yeah,
then that's going to trigger all sorts of fear. It's
yeah,
going to feel like you're in a casino, and well, I want to be a winner too. Let's just put some money in, and
yeah.
maybe you win for a little while, but yeah, like, you end up being the herd of cattle that falls off the cliff. You don't do that.
Yeah, because it hurts. Yeah, I mean, it
It
does.
does.
It hurts from both a psychological standpoint. It hurts your capital standpoint, and that type of thing. And, one of the things that also you know gets me about this is that um, having that bias. Okay, these beliefs. One of the way to I think counteract each one of these three biases is to be trading a proven mechanical system.
Yeah.
You mentioned, you mentioned putting in your orders after hours or setting using your setups on because we do that with the autopilot trading all the time. I send out a pre-flight checklist for both ETFs and stocks. On the weekend, folks can, if they're going to parallel trade with us, they can put in their trades, and I highly suggest on Sunday afternoon, and that way they're ready. And we have an automated system where it'll take care of getting you into the trade and then also exiting with either a profit or a stop loss. And so it removes a lot of the unnecessary fear from people doing the cycle. And so that works for us. And then we may make the other thing is I stay away from trading the first hour of the day.
Hmm.
My preferred time to trade during the day to watch the charts and see what's going on is the last hour of the day. And because the last hour of the day, a lot of times your price action is almost done for the day. And so
Hmm.
the candlesticks you see if you're a candlestick trader, or the price action you see of the candlesticks, you see at the end of the day is much closer to being a complete story. So if you
Mm.
have a reversal signal, you can say, oh, okay. And your probabilities of this being a potential high probability trade setup, you can go ahead and take it at the end of the day. And you're oftentimes a lot closer. Your risk is smaller because you're closer to your stop loss. So, anyway, so that's because as you mentioned something about alerts, people who say that they don't use hard stop losses because they put it because they don't like hard stop losses and they'll use the alert systems and then the alert goes off and then they don't you know follow through to exit the trade after the alert goes off. So I'm figuring that somebody who says that they only use alerts as their stop losses are lying about or if they'll lie about how they take their stop losses or they're lying to themselves, they'll lie about anything else. So
Mm.
that's a thought. So
Yeah, I think stop losses are it could be a whole show.
oh gosh, yes. Maybe we should talk sometime about stop losses. That'd be good. And
Yeah.
yeah, guys, let us know if you're out there. If you'd like us to do a session on stop losses, how to use them, how to do them, and all that kind of stuff. Mike and I
All the
would be
psychology behind it too.
so. So to avoid herd mentality bias, traders should rely on their own analysis, stick to their own plans. I encourage people to use a mechanical trading plan, because I basically break it down to like this: a mechanical system, mechanical strategy, and mechanical tactics. And that makes up my trading plan. And doing your own research and not just following the crowd can help prevent mistakes.
Yeah,
So,
tune out the crowd as much as you can.
so anyway, these now what happens during the year? There's three myths we're going to talk about really briefly here and go into, but three myths that are driven by these biases. And the first one is the belief in the Santa Claus rally, Mike.
Ho, ho,
So,
ho.
oh, ho, ho. And so, that the belief is that it's guaranteed. So, uh, in all the time I've been in the market, most of the time there is a Santa Claus rally.
Mhm.
Now that can happen during the last 2 weeks of the year, the last week of the year. Sometimes it's the last month of the year. Sometimes it goes into November. Uh, at the same time, though, there's no absolute guarantee about the. So, what are some of the biases that trigger that belief in the Santa Claus rally?
Well, like you said, the historical perspective, taking a look at the data and seeing that, yeah, this does in fact happen a certain percentage of the time. But the problem, I think, is relying too heavily on it and setting a certain expectation that this is going to happen at this particular time. It would almost be like, that we all know that spring follows winter.
Right.
But we don't know exactly the exact day that that's going to happen. So if we say that, all right, spring follows winter, so I'm going to start planting on April 1st because we're anticipating spring. Well, you might end up being the fool on April Fool's Day because maybe you have a little bit of an extended winter. Maybe you get some extra frost. You've got to understand that yes, seasonality is a thing. Yes, the Santa rally is a thing, but you need to trade what's actually in front of you right here and now. It's not an excuse to not do that kind of research. And
Okay.
if you do, then you end up falling into all sorts of problems.
Okay. So yeah, so the Santa Claus rally, yeah, while yes, it is a fact, but you know, again, like you said, trade the chart that's in front of you. And so that's it. Then myth number 2 is year-end gains are easy to get with little effort. Because we know what's going to happen, right?
Oh,
And
sure.
so what about that?
Well, I just sent my money over to this guy, Dennis Wilborn, that I met a few years back, and let him trade it for me.
There you go. No,
That I think that's the easy thing. But
and
in
so
all seriousness, I think that if you think that any part of trading is easy, you're setting yourself up for failure.
yeah,
Yeah, and that's really what I thought early on when I first found out about trading and going into the bank and trying to buy stocks, and they hooked me up with mutual funds and
right,
thinking that, oh well, the pros have it, they're managing it, and I've got all this diversification, and I've got loads of time on my side because you're supposed to leave the money in and you let
right,
it compound out over time. Well. Starting out in 1999, best of circumstances, everything's going up, and then taking the money out in 2002, and I'm down 20% with the pros handling it, with 3 years of being in the market, and with loads of diversification. No,
yeah,
none of this is easy.
yeah. And the thing about it is that you,
Yeah,
unlike
Caleb,
many,
losing money is easy. That's
yeah,
the thing.
you, unlike a lot of other people who would have gone through that 3-year cycle from 1999 through 2002 and been down to 20%, a lot of people would just quit. They would say, "No, I stopped." But you didn't stop. You kept going and you persevered, which is a really excellent quality and trait. I think that this myth talks to, basically that gets back to that overconfidence bias. And, and, you know, I know in my own trading, I find that I have almost invisible ceilings, or maybe not, something, I don't know what it is, but I'll get up to a certain point. This is the way it used to be. I would get up to a certain level of value in my account.
Hmm.
And when I would get up to that value, something would click in, and it may be the overconfidence bias would kick in. I'd start being a little bit more risky. I'd start being, going, oh man, I'm doing really well. I'm making all the right moves. And I would basically, my overconfidence caused me to risk more. And that
Mm.
never turned out good. And so I'd run up against that ceiling, start trading foolishly, and it would knock me back down. And then I would do it, go back and do it again. I get down to my floor, and there was a floor
Hmm.
too, and then reverse that back up to the ceiling. And the breakout of the ceiling had to be when I matured as a trader, became better with my trading psychology,
Hmm.
better in following my trading rules,
Hmm.
and stopped chasing my return and started focusing on mastering the process.
Yeah, you hit
Okay.
on a lot of key things right there,
Yeah,
especially like with the where's your focus, right?
exactly.
You could be doing so well for so long, and that happens to so many people. Like you get to this level, and it's just like, wow, this is new, and your focus goes on, wow, this is new versus the thing that got you there.
Exactly. And so, yeah, Caleb mentions, he says, losing money has been very easy at times sometimes. And yeah, both Mike and I can relate with that, Caleb. Good insight. Hey, and kind of the last method we'll just really chat about really quickly. The Mike one has a little bit about the psychology of handling the strategic shifts. But it is and this has to do with the herd mentality, is that all big market moves happen at the start or the end of a year. Now, there's a lot of validity in that tends to be what does take place. But again, just because it takes place doesn't mean it has to happen every year. And so, have I think a person should have on their chart the exact pattern. Like I trade three different patterns and one or two different triggers. And if I don't see those patterns and triggers, my pattern set up and my trigger, I don't trade. And
Hmm.
so that keeps me out of the market sometimes, but it also keeps me out of trouble. And I have to be very careful that I don't let some of these biases taint what I see. Because if you
Hmm.
look at a chart long enough that is telling you don't trade, you'll see a reason to trade.
Oh, sure. Same thing with stats, right? I've heard uh, that's very similar saying about statistics. Like if you torture numbers long enough, they'll tell you whatever you want.
Exactly. Yeah. Yeah. And so anyway, so link these myths to common problems like, we can basically take a look at this: common problems, bad risk management and emotional trading. And you get insight of each one of these in both Mike's book and my book. And so you may want to take a look at those. And so, Mike, let's go into segment three, where we're talking about just the psychological and strategic shifts that a person can make to help get them past both these myths and the biases that go along with it. And then I'll follow up and finish up with the stocks that are interesting.
Sure. So, the most people out there that are listening, I think that most of you guys are working full time. You're interested in trading. You want to make this trading thing work. You see stocks that are going up. A lot of them going up real big right now. 10%, 8% in a day, not in a week, in a day.
Right.
And you want to take advantage of that. And it's very, very tempting to hop onto X or StockTwits or Reddit or anywhere else and just see what the latest thing is of the day and just be like, you know what, I'll just buy some of this and hope for the best. What you're doing in that is actually developing a bad habit. And I think that well, what'll serve you more is taking a mentality like this. The market is an infinite stream of opportunity.
Mm.
Infinite stream of opportunity. So it doesn't matter if you got this trade or that trade or the next trade. If you're thinking about it like you're going to be a surfer, right? The surfer isn't worried about, oh, I missed that wave. Well,
Right.
just get the next wave. The more important thing for the surfer is learning how to surf. And then you could catch a wave anytime.
Right
So
on.
that's where your focus needs to be. You need to learn how to surf. You need to learn how to trade. Learn the skills. And then once you're able to master the skills, then you've got a skill set that lasts you an entire lifetime.
That's
So
right.
focus on skill development first, and then you'll be able to have profits, not just today, not just next week, next month, next year, but over a lifetime. And that's what, yeah, Dennis, correct me if I'm wrong. That's what where the show is all about.
Oh yeah, without a doubt. I mean, we want to basically highlight, the myths people believe, the false beliefs. I think false beliefs. A person comes into trading to learn to trade with
Hmm.
a set of false beliefs that are already predestined to cost them money.
Hmm.
And because they come from what we learn from our parents, they come from what we learn from society, from social media, about things being easy, being and all that type of stuff. And in reality, I'm gonna basically reveal something right now. Learning how to trade and going through the emotional ups and downs of learning how to trade for me personally was harder than learning how to fly jets in the Navy and land on aircraft carriers at night.
Wow.
It I mean, and because, um, and a lot of people say, "Oh, no, that can't be, that can't be." No, it was, and I've had to grow more in who I am and what I have inside, and my beliefs had to be challenged, torn down, ripped up, burned up to set up a new set of beliefs to know that I can do this, and then that's what started promoting me towards being successful. But I still have to stay in the boundaries of my system. If I get outside the boundary of
Mm.
my systems, I'm screwed. I mean, that's just the bottom line.
Oh yeah, absolutely.
So, anything else on that, Mike? Because those are really great points.
Yeah, no, no. Well, uh, well, what's the next thing that we've got here?
Hey, well, let's run over and take a look. Let's take a look at a couple of stocks. I think.
All right.
Well, first one is not a stock at all. It is basically the two-time leverage ETF of Tesla. It's called TSLL. One of the things I like about this in particular leverage ETFs is it does have weekly options, and so it opens up a lot of other potential trades for me. You can do covered calls with it, as I've been doing, and you can do poor man covered calls where you buy a leap out there for a little bit lower. But on this particular Tesla, I bought it over here at about $11. At about $11, somewhere in around this area here. And
Okay.
it went up, it went, huh? Can you see that?
Yeah, yeah, I see it.
Okay. So I bought it over there And what I did is it didn't take off immediately. As a matter of fact, it dragged and fell back down here. But I know I wanted to hold on to Tesla for quite a while. And so I sold covered calls over here and was generating. So even though I was down over here, my covered calls had me up for the position, which was very nice. And so I'm profitable.
Mm.
And then we take back off. And I was in at about $11 and I had driven down my cost basis to about $8.50 by the time it got over here. So I was at the break even mark. And then unbeknownst to me, we took off like a rocket ship. And on the shares I was holding, got up to about 102%, sold, part of that position out, half of the position out to cover my cost basis. So now I am literally trading with the house's money, and I'll do covered calls on the rest of that. And I'll look for opportunities to add to my position at the right time. Right now I'm extended. I'm not going to be adding to my position right here. So that's one of the entities that I'm going to be keeping my eye on going into the rest of the year. And what's another great one that we're looking at? Here is in the biotech. Now I have to the biotech, this ADMA. Also, we jumped on ADMA when it was down here about the $16 level, coming off the 8-day moving average. We can see it has run up over 40% in the short time that we've owned it. And it has broken out, long-term breakout, which to me says, okay, I'm going higher. So I'm waiting for a nice pullback into a level of support on ADMA. And the other thing, ADMA, looking for a nice pullback into a level of support, probably at the 8-day moving average, or maybe just the breakout area about $20.70. Full disclosure, our premium members, we are trading this for the autopilot trading. So I like ADMA. And here are a couple of newbies that you may want to be taking a look at it. If you have been trading, watching Bitcoin has been taken off like a scalded dog. Well, Coinbase is not a Bitcoin miner, but they're very much in the transaction of Bitcoin. Check this beautiful breakout. It broke out above the 275 level. Let's give you just a real quick projection up to the upside of where it could be going fairly quickly. And I just use my Fibonacci's on this. And if I get a 100, whoops, let me drop that into place. Get in there. There we go. If I get a full move up that is symmetric with the move down 100%, that would put Coinbase up at $420. And that would be from where it currently is at
least another $100 move.
Yeah, about 26, 27% more up to the upside. I like that. Am I buying it right here? Heavens no. I'm a pullback trader, and so I'm going to wait for a nice pullback on it. And then drum roll, please. Here's the last entity that I'm looking at, and it is the 3-time leverage ETF of XOP. XOP is the non-leveraged ETF for the oil exploration folks. And as you know, that President-elect Trump has said that he is going to very much push for more oil exploration. The thing I like about this one, and this is the one I wanted to show everybody earlier, even if I just stay in this, and here's the, even if I just stay in this horizontal pattern right here, well, catching it at the bottom, running it to the top, it's done that twice this year, twice this year over the last, let me go back over here. Okay, that was back June of last year when it bounced up and came back up. Then it's done it one other time here. but over the last, in less than a year's period of time, about 294 days, so a little bit less than a year, it had 2 runs of over, run here, over 61%, the run back here, and all the way up to 68%. And so if it repeats, we have just broken out this downtrend line, this flag line. And if we run all the way up from where we're at right now, just back up to those past highs, we've got probably about another 33% back up to the upside. And when you find an entity, leverage ETF, or even a stock that's doing those kind of repeated runs, and you can get in them towards the bottom, you're not going to get the exact bottom, take out at least half to 3/4 of that run up to the upside, and that compounds out very nicely. I mean, you can do the math. If it had 240% runs in less than a year, that's 40% compounded twice during the year. So that is a great way to start building wealth for your, for your individual, for your accounts. And so, what do you think about those, Mike?
Oh, that's a great one. I didn't know about Gush, so thanks for turning me on to that one. That looks like a great trade.
And you said something a little bit earlier about the leverage ETFs.
About Gush?
No, about all the leverage ETFs that I've kind of introduced you to.
Oh yeah. So you've introduced me to Gush. I knew about TNA, but I've started looking at it more as a result of our friendship, and
Right.
I didn't know about TSLL. Every once in a while, like NVDL, that's a
Yep.
leveraged ETF of NVIDIA. And so all these leveraged ETFs have helped me out quite a bit in a variety of ways, and being able to trade them outright and able to do some of these option strategies around them. And it's been very, very helpful. So thank you.
Well, you're welcome. Like I said, my main intent is to help people put money in their pocket.
Really, you're doing that for me.
And so, okay. Hey, Mike, we have rapidly, gotten to the end of the day, and I'm just sitting there going, wow. So, if you find this session and the podcast helpful, please, I won't ask you, well, I won't ask you to subscribe and hit the bell, the normal stuff. What I ask you to do is just copy the link for the recording of this, share that with another trader, share it on social media, because it's going to be Christmas time, and what a wonderful gift to let somebody else know about the stuff that Mike and I are doing as we debunk market myths. And so, Mike, any final thoughts?
I think that one of the best gifts that we could have is sharing what works.
Right on.
Like take knowledge and share it. That I think that we're as Catholics, as Christians, that's one of the things that we're obligated to do.
That's right.
So that's part of why I'm here, Dennis. I'm sure that's part of why you're here. And if you, even if you're not a Christian, if you have similar value, if you think that this is good information and you're getting value from it, then yeah, spread the love.
Yeah, without a doubt, and I agree with that wholeheartedly, because the other thing that both Mike and I, in our belief system, with our Christianity, is that we're not bashful about it. We're not shy. We don't over promote it or anything like that. But we know that God is working with us and in us, and if that bugs you, I'm sorry about that, but no, I'm not sorry about it. It's actually a good thing, because maybe he's bugging you about it for a purpose and a reason. So as we start to approach Thanksgiving and Christmas, Mike and I will be talking about some really great stuff going forward, and we got some really great guests to be talking with also. Who's our next guest up?
Yeah, I think Andrew O'Connell is the next guest.
Now
he runs this firm called Pristine Capital, I believe it's called.
Yeah.
And he's also competing in the U.S. Investing Championship this year. And last I heard, he was up 400% on the year and
Wow.
is in first place in his category.
So so now I think he's going to come when, the 18th?
Yeah, that's next week, isn't it?
Yeah, next week is the
Yeah.
18th. And that we will be celebrating next week on Saturday, Monday also is Revolution Day in Mexico. Anyway, that's what my calendar says. So
All right.
anyway, we look forward to seeing him. And so for everybody else, aloha, God bless. And again, if you have any questions, just drop us a note, leave a message over in the comment section on our YouTube channels. This will float out on both Mike's YouTube channel and my YouTube channel, plus Twitter, plus X, or not, well, X is Twitter, and then also eventually over on Spotify. So aloha, God bless. Thanks, Mike. Another good session, man.
Thanks, Dennis. Take care, everybody. God bless.
Okay. Well, darn it.